So how can you end your stress from getting IRS notices and get a fresh start, putting your tax debt behind you, even settle for less than what you owe the IRS? I'm excited to share this with you because I've been there and done that and fixed that. First for myself and subsequently for many others who found themselves behind with the IRS, getting notices and not knowing what to do or where to go to resolve the situation. I've had success fixing back tax problems, and in some cases saving taxpayers tens of thousands and even hundreds of thousands of dollars in tax. Please hit the subscribe button if this is the kind of information you're looking for, and ring the bell to get updates on how to deal successfully with the IRS. If you have a back tax problem where you owe the IRS, say $10,000, $20,000, $50,000 or more, you have four basic options to choose from to resolve your tax matter. One is the offer in compromise. You make an offer which the IRS accepts to settle your debt for less than you owe. Do you know how to calculate an offer that the IRS will accept? Let me give you a no BS approach to how an offer in compromise really works. You don't make a random offer for pennies on the dollar and then hope somehow someone somewhere is going to accept your offer and you're going to skate away for paying less than you owe. Instead, you follow the offer in compromise formula, a clear formula which the IRS has set up and which has two parts. First, your assets, and second, your income. So the first part is your assets. It's the money you have in the bank, the cryptocurrency, the boats, the cars, the furniture, collectibles, any rental properties. Let's say, for example, you have $100,000 in the bank, or you have equity in your home of $100,000. Your offer to settle your debt for $50,000 will not be accepted. Why won't it be accepted? Dude, you've got assets. The IRS knows it, and they're not going to let you get away with not paying your tax debt if you have assets in hand. Or maybe you had assets, but you sold them. For example, you liquidated a 401k or an investment account because you needed the money to pay your kids' college tuition. So the money's been spent, you didn't pay the taxes on it, and you don't have any cash now. That's what the IRS calls dissipated assets. That works against you as well. Don't expect to get an offer accepted if you've dissipated assets. So assets are the first part of the offer in compromise formula. The second part is your income. Let's say that your income barely covers or doesn't cover your living expenses. Well, then you have a good likelihood of getting an offer in compromise. And the more dependents you have, the better the likelihood of getting your offer accepted. With more dependents, you're going to be allowed higher living expenses. I do come across a lot of taxpayers whose monthly income barely covers their living expenses, but they have some money in the bank or they have some equity in their home. In this case, you're not a good candidate for an offer in compromise, but the second option may be a great fit for where you are, and that second option is called currently not collectible status. They agree not to freeze your bank account or garnish your wages or take other enforcement actions, and you don't have to make any payments because your living expenses aren't sufficient to cover your own monthly expenses, plus have enough to pay the IRS. Where you benefit from this situation is you're making zero payments. It's like a payment plan with zero payments. Keep in mind, there is a 10-year statute of limitations on IRS collections. If you go to currently non-collectible status, the clock is still ticking, the meter is still running. That's an advantage compared to an offer in compromise, which stops the clock. We call it tolling the statute of limitations. An offer stops the clock, and an offer can take up to a year to accept if you qualify. Now remember, if your assets were too high to allow you to qualify for an offer in compromise in option 1, and your income was too high to allow you to qualify for currently non-collectible status in option 2, then option 3, which is an IRS installment agreement, could be the best option for you going forward. A lot of taxpayers ask me, so what's the big deal about an installment plan? What makes that tax relief, so to speak? Well, it becomes tax relief because it's a powerful way to keep the IRS from freezing your bank account or garnishing your wages. I have a colleague who once described the IRS as a bunch of vultures who swoop down and seize your stuff, but not when you have an installment agreement. You agree to make your payments and stay current. They agree not to harass you. It's important that both sides keep their agreement. In other words, you don't want to do anything to disrupt the installment agreement and then get one of those notices we all hate, and that IRS notice is called a Notice of Intent to Terminate Your Installment Agreement. Now, there's many types of IRS payment plans, and to a large degree they depend on how much you owe. If you owe less than $10,000, you can apply online and get an automatic agreement to pay off in 3 years. If you owe less than $50,000, you can get what's called a streamlined installment agreement, where you will make monthly payments and they don't even take any financial information. If you owe over $50,000, you get a non-streamlined agreement, where you make monthly payments over an 84-month period. However, the IRS will likely file a notice of federal tax lien, and if you owe the IRS 6 figures or more, you'll have to set up a payment agreement where you submit financial information and they get up close and personal. The key in all of this, when you come to setting up an installment agreement, is that you set up one that's affordable. Don't just jump into an IRS payment agreement because you owe $50,000 over, let's say, 72 months, and now you got a $700 payment. Well, can you really make that payment? Is it really an affordable agreement? Which brings us to option 4. It's a partial pay installment agreement. Have you ever heard of a partial pay agreement? With a partial pay plan, it doesn't just become a matter of taking your tax debt and dividing it by, say, 72 months. A better plan would be to get the IRS to agree to a lower monthly payment based on your income and expenses, where you cannot make a, say, $700 payment, but you can make a lower payment. After the 10-year statute is up, you may end up paying less in total payments than what you actually owed the IRS. An associate of mine has called this a backdoor offer and compromise. Why? Well, because you're settling for less. It's not what you see advertised by all of the national tax relief companies, but it's a powerful way to resolve your debt, settle for less, and move on with your life. Now, oh, by the way, there is a 5th option to resolve your tax debt. Option 5 is called pay your balance in full. But let's face it, if you could pay your balance in full, you probably would not be watching this video. So that's how to get tax relief on your back tax debt. You probably have a question, maybe more than one. If you have questions or need help, please email me at the address on the screen. I'll be glad to help answer your questions. But please don't let this information overwhelm you. It's easy to get frustrated or get angry with the IRS or shut down and do nothing, taking no action at all. This information won't help you unless you take action. So review the options, see which is the best for you, and let's get busy. Then you can say, bye-bye back taxes. Hey, that's it for this time. Until next time, so long.